forget the car payment. You can even pay for your food in installments, right? Your DoorDash delivery, you can do it. Klarna or something like that. I don't know if we have Klarna in Canada, but you can, right? Every purchase has an option to pay in installments. Add the pressure to prove to others that you are succeeding, and you can start to make some decisions that actually put you in, right? A $700 car payment for a Dodge Challenger or a brand new Acura. Things like that can actually put a parachute behind people's back. Mortgages have always been the same. It's your income, your down payment, your credit, and your debt. Those are the four main things. And the debt is where the biggest difference is made. So every dollar you debt has a bigger impact on how much mortgage you can qualify for than every down payment. Your income also has a bigger impact. So when I talk to people, their main focus is down payment. How much do I need down payment to get a mortgage? And down payment is important, but it actually has the smallest impact. Malaysia is very similar to India, where you have to pay people off to get business done.
Welcome to the podcast, Jaidev.
Thanks
Thank
for
you
welcome.
for accepting the invitation. So, just as you mentioned about Hanny Lounge, right? Did you see our podcast with him? We brought him on the podcast as well.
Oh, I didn't get a chance to see.
No?
I'll have to look.
It's gonna be on our channel on the Undirected YouTube. So, please tell me about yourself. Where do you belong from India? Are you from India?
I'm
So
Punjabi. I'm from Malaysia. That's where I'm born. My parents are born in Malaysia, so my roots go pretty deep in Malaysia. If you say home to me, I don't think India, I think Malaysia. I have 30, 40 cousins there. We come from Malaysia. I grew into a middle class family. My dad started a security business out there, built it up, and decided Malaysia is very similar to India, where you have to pay people off to get business done. And he decided he didn't want his children being in that environment. He wanted them to be in a place where being a hard worker and knowing how to get along with people is all you need, which is why he moved to Canada. I was lucky to just be a passenger in that. In 2009, my dad brought us here. I was 11 years old. I grew up here in Winnipeg.
did you feel the difference from coming from Malaysia when you were 11 years old? Yeah.
Big difference, because 11 years is a long enough time to have a culture ingrained in you before you move to a new place. But you're also young enough to learn the new culture in this new country. So I found myself being someone in between. There are parts of myself I can't really share here because how people joke or talk in Malaysia wouldn't really be considered appropriate here. But at the same time, I like how proper things were, and you have to talk a certain way, and you deal with the fact that you're an outsider. That's not something kids today would have to deal with as much, because it's quite normal now to see people of different colors in your school, different kind of foods, different smells. But when I came, it was still a thing that I was worried about how my food might smell, and so fitting in was a bit tricky. But I'm lucky I got two good friends I met in grade 7. They're both white guys. It helped me learn. I'm more ingrained, probably Canadian now. I spend more time of my life in Canada now than I have in Malaysia. So for all intents and purposes, I feel pretty Canadian. Except when you see me in my house with my family, I turn Malaysian. My accent even
That
changes.
happens. I can understand that. And you also mentioned that it's very easy to adapt to the environment when you are young. I feel that when I was 19, I came to Canada. At that moment, I was still at a stage of learning and exploring. You should keep exploring your whole life, though. I was living with my parents for the last 20 years, and then I moved to Canada. That's when I saw the bigger picture of the world, because it was just me in Canada exploring jobs, looking for what can I do better. I can feel that when I am with my parents, it doesn't feel like that I am from Canada. It's like I've been living with them.
It's an independence you're not used to. Even though I'm from Malaysia, the culture is very similar to India, where you consider your family in almost any decision you make. You come to Canada and it starts to become individualistic. You're encouraged to think about, what do I want? Who do I want to be? And that can feel disorienting when you grow up in a place where before I make any decision, I think, what would mom think? What would dad think? Maybe what would my sister, brothers, my close cousins think? You have to break that barrier to explore your own individuality. That can be tricky, but it's worth it because you gain your own identity. And then I have to go back to where I come from with these new lessons I gained and try to integrate the two, or else life can become two-parted. I want it to all be integrated.
That totally makes sense. And being from India, my parents They were taking care of all my decisions until I was 18, 19, 20. And I was used to it. Whatever decisions I have to take, I'll go ask them what's happening, what should I do, and whatever feels like the best advice from them, that's what I should do, right? So I still feel the same way living here in Canada for 7, 8 years. Still feel like I need some advices, but if you are just by yourself, you just can't really ask anybody and trust that advice, right? I feel like if I can get some good advice from my parents, but the problem is now because I am here, they are not. So even they want to give me the best advice, they just cannot because they are not here. They are in India. They can't think and act like Canadian because they're not in Canada. Please tell me more about how did you choose mortgage advising and how did you choose that this is the career you want to go in?
My favorite thing to say is I was 7 years old and I used to dream of becoming a mortgage broker. I'm joking. That's not actually what happened. But I was working in a sales profession full time. And in that profession, truly, I just learned that when you work in an environment where you have structures above you, if you want to take on more responsibility or you want to do more in your role, you need permission from your boss. Your boss needs permission from her or his boss, so on and so forth. Every 6 months, 1 year, I would ask for more responsibility, and I would get told, let's wait till your 6 month review, 1 year review. And I realized for me, I did not want to live in an environment where I had to wait for somebody to let me take on more responsibility. I need to do something on my own. Because as a mortgage broker, tonight I go to sleep and I think, what if I worked with lawyers who are helping people going through a divorce? Those people are going to need help with their mortgages. I can start that phone call tomorrow. I don't need permission from anybody. In 3 weeks, I can get some feedback on those calls and decide how can I serve them better. Maybe I can't serve them. Whatever it is, I get feedback quickly. In a 20, 30, 40, 50-year life, I will have learned a lot more. That's going to increase how much I can serve people, but also my earning potential. So that's truly the reason why I got into something that was independent. Now, why I chose mortgages, I'll be straightforward. I said, as Indians, we do really well in established industries. You look at trucking, you look at financing, realtors, we really dominate that market. That's truly the decision I had. I decided to be a realtor initially, and I spoke to a cousin of mine who was in the industry, explained mortgages to me, and it actually spoke to me more hearing about home ownership. It sounded like a great idea, but financing always felt confusing. I knew about down payment, but as soon as I read past down payment, it felt like too much, and I said, you know what? I'll look at this later. Let me focus on my job or my life first. So it spoke to me more, I guess, the pain in that area, and that's what I wanted to solve for myself. Now I solve it for others as well.
Makes sense, and I understand. Being from India, we like to build relationships and we kind of do it the best way possible, right? With relatives or with your customers, your clients, right? So that makes sense. So tell me more about the mortgage advising. Tell me more about your job, please. What are your duties?
My duties, a big part is to create clarity for my clients. There's a lot of information out there. It's not all going to be relevant to any individual. They have certain requirements for what they need. Maybe they're a first time home buyer, maybe they're buying an investment property, or they need to pull equity out of their home, whether to pay off debt or to buy another property. So each of those people are going to need different advice and different places they're starting from. So it's looking at that person's financial situation and asking, this transaction you're wanting to make, does it even make sense right now based on your financial situation? Or maybe we need a 6 month plan, 1 year plan to get you there. And then I show them, hey, this is what it's going to look like. Not just an interest rate, but how much cash do you need to have up front? And what is this going to keep costing you monthly? What's that's going to look like for you? So that's what I do. I provide clarity. Speed is important, right? When you want to know something, you want to know it right away. So I try to do it in as timely fashion as I can for anyone I help.
And how do you look up to Winnipeg's market? What have you explored so far, and how was your experience?
So I joined in this time where inventory was constantly lowering, home prices were going up, and wages have kind of stagnated, right? People's wages went up something like 20% in the last 6 years. Home prices have gone up almost 50%. So what you could buy for 300,000 in 2020 is now 450. Wages haven't kept up. It's pretty hard for people to enter the market, but it's also hard for people to move in the market. If you're a homeowner right now, Yes, you can get a good value for your property, but then you have to become a buyer and you have to pay that same top dollar for another property. So nobody's incentivized to move right now. We're in a stagnated market. A first-time home buyer can't enter the starter home because the person who bought the starter home doesn't want to move up to the mid-size home because it doesn't make financial sense. They got a really good rate in 2021, 2022. It's about to come into renewal, but it still would be a big financial hit for them to make a jump. So what I would say right now I'm seeing in the market is a need for reassurance, especially to first-time home buyers, that you can still be a homeowner. It's going to take a bit more time and attention because it's not as easy as it used to be. Property taxes went up quite a bit last year. That's going to make a difference to someone's qualifying ability or ability to sustain those payments. Winnipeg is one of the 4 cities in Canada that you can still have a comparable cost of owning a home versus renting. That's going to be Winnipeg, Regina, Quebec City, and Edmonton. Who knows how long that will still be the case. We are still in that market, but you need to focus on the fundamentals more. Mortgages have always been the same. It's your income, your down payment, your credit, and your debt. Those are the 4 main things, and the debt is where the biggest difference is made. So every dollar you reduce debt has a bigger impact on how much mortgage you can qualify for than every down payment dollar. Your income also has a bigger impact. So when I talk to people, their main focus is down payment. How much do I need down payment to get a mortgage? And down payment is important, but it actually has the smallest impact. Every dollar you increase your down payment is a $1 increase in how much home you can buy. That's a 1-to-1 increase. Whereas if every $100 a month you increase your income, you're looking at a 5,000 to 10,000 increase in home that you can buy. That's a much bigger increase. And then every $100 a month you reduce your debt, you're looking at about a $15,000 increase in a home that you can buy. So the debt is probably the biggest point. Social media culture has increased comparison within our community. But more importantly, if you're an immigrant from India, from Malaysia, from Nigeria, and you come here, everyone back home can still keep track of your lives. A lot of people feel pressure to show, hey, I made a move and it made sense for me. So look at this nice car I have, this nice house I have. And that pressure added onto the fact you're moving to a new country. You might not know anyone here. You don't know how things work yet. You're going to take a minimum 2-3 years to understand, another 5 years to build, and maybe 10 years to get to a place you feel established. Having that pressure alone is heavy enough. Add the pressure to prove to others that you are succeeding, and you can start to make some decisions that actually put you backwards, right? A $700 car payment for a Dodge Challenger or a brand new Acura. Things like that can actually put a parachute behind people's back to owning a home.
That's true. It's very hard sometimes to accomplish things in Canada or anywhere when you don't know people around. So, do you also teach people or tell people how can they lower their debt? Do you advise them?
Yes, I do. It's a very tricky conversation because we look at numbers and we think in terms of numbers, we don't. We think in terms of emotions. Our decisions when we buy something has nothing to do with the numbers and everything to do with how we feel when we want to buy that thing. It's an attainment, an achievement thing. So every individual has a different relationship to that money and why they're making their purchase decisions. I'm talking to someone who's deep in car debt, deep in student loan debt, but they also have a line of credit that's racking up because they feel a need to show a lifestyle that's actually in the background causing a lot of pain to them. To that kind of a person, it's not an easy conversation because they're having a first-time conversation with me. I start with the numbers and I say to them, hey, your $700 car payment, that's dropping your qualifying ability by about 120 to 130,000. So without this car payment, you could buy a 400K home. Right now, you're looking at 270K. That's a big effect, right? So that's how I start the conversation, is how this number is affecting your purchasing ability. And debt is usually the simplest to understand, but it's hard when you're used to a certain lifestyle to then downgrade. If it's someone who's already made those decisions, then they're going to need at least 1 year to get a new car, get out of this car payment, make a plan. If you're in student loans, you might not be in a position to buy right now. If somebody's starting a business, becoming a doctor, a lawyer, some sort of schooling that requires a lot of student loans, maybe don't look at owning a home as such a big goal right now. The goal down the line, but focus on your profession, focus on building your business. The weight of having to own a home and building something is a lot of weight while also maintaining relationships. If you have a loved one, you have children, you have friends and family. So it's a matter of attention and focus, and it's trying to do things in stages and being okay with things being slower. I think a lot of mortgage brokers or a lot of realtors, people want to make great promises. We'll get you that home with this price, just pay us a 1% fee. That's called a shortcut, and that shortcut has been a lot of people over the last couple of years because they entered the market at a time where things were great, and now interest rates have risen. They can't even get out of their mortgage because it was false to begin with. So I've spoken to a few people and they said, I came to Canada, my friend said, just pay 1%. I didn't even know what type of mortgage I was getting, and now I want to get out and I can't. And they feel very trapped because their home that is owner occupied is classified as a rental with the bank. And if they were to do anything right now with their mortgage, it would come out that it was a fraud. And that would obviously affect them and affect maybe even the professional who helped them.
I have a question. As you said, if somebody is paying $700 on his car payment, that can bring drastic change, about 150,000 of they can get more, right? But they cannot because they already have payments. Let's say a person who's got good credit score, but he's got $800 payments on car. And on the other side, there's another individual who's got no payments, no loan, no debt, but his credit score is not as good as this guy. So what are we looking at? Where are they standing?
Credit score in Canada, 680 is considered excellent. Meaning to say, once you hit 680 and above, you're not getting access to anything more. Of course, you want 750, 800. Those are nice buffers to have. But anybody with 680 or above is going to be treated the same. The car payment is still going to be the major factor. Whether your credit score is 500 or 800, the effect of a car payment is the same. That doesn't change. What it does change is whether someone is willing to lend to you, because a lower credit score means you either miss payments, you overuse what was available to you and you didn't pay it off. So if someone doesn't have any debt payments, it's not likely for them to have low credit score. They might have no credit score. So you have two scenarios. Someone who's paid off all their debts on time, they can't have a bad credit score, except for if they're overutilizing their credit. So let's say they have 5,000 limit on their credit card, and every month they're carrying 5,000, but they're paying off everything on time. That person can have a lower credit score because you can explain that they were carrying this limit, but for 3 years in a row, they never miss a payment. They carry a high limit, but they also never miss a payment. That can be justified and usually on an exception basis passed through. If somebody misses payments or makes a lot of late payments, that's hard to justify. That's somebody who's going to need at least a year of good history. So they need to wait a year. You can't rush this process. If your credit score is already in that place where you've had a few late or missed payments, you need time to build it up again. You can go to a lender and say, hey, I had these problems in the past, but look at the last year. I've been doing great. I'm on track to keep doing great. Please lend to me. As far as qualifying ability, it doesn't change. The numbers don't change. It's just whether they're willing to lend the money to you or not.
One more thing in Winnipeg, the 1% which realtor is going to charge you because they are finding a good property for you. What's happening is instead of paying the down payment, they do play with some numbers and they will increase the amount of the house in the papers. Just by doing that, somehow you don't have to pay the down payment now, which sounds like very good idea to do, right? Being a buyer or a new home buyer, it's not a good idea to get into such things because you don't know what's going to happen later, right? And how it's going to act on you. What do you say? Do you have comments on this? I'm sure you must have heard about it. It's happening in the market. And how can it turn out?
Yeah, I have heard a lot about it. I don't study it, so I don't know the details of how they carry out. I don't want to sugarcoat it. The word is fraud. How they carry it out, I don't know the details. But I know there are people doing that because I'll have a conversation with somebody and then they'll come to me and they'll say, hey, this guy's telling me pay me 1% and we'll get it done for you. And I'm saying, well, based on the regulations I'm following, we can't get you to that purchasing ability and I don't do those things, so I'm not going to be the one to help you. So I know that's happening. I don't know the details of it, but I can tell you the effect of it. I used to think these consumers knew what they were getting into. But I've had a few conversations with people who are 3 years into a purchase like this or a mortgage like this. They all kind of say the same thing. 6 months in Canada, 8 months in Canada. My friend said, talk to this realtor. I trusted my friend. I trusted the realtor. I got it done. And now 3 years later, I understood what I got into. So what I'm understanding, first of all, is not to blame the consumer because they're just trusting the line that was given. As Indians, we build great relationships. And unfortunately, there are bad actors who take advantage of that great relationship. They know you're coming here knowing nothing, and they know they can kind of get you to do what ultimately serves them, right? They're getting the commission check. That's why they're making it happen. Whatever the consequences to you down the line, they try to clean their hands, which is not true. They have a fiduciary responsibility to do right by you. That's how they got their license. The details, I don't know, but what I can say is it's a short-term gain for a long-term pain. You are putting yourself in a debt beyond your qualifying ability. You didn't save up a down payment. You don't have the income to carry this debt. There's a reason those regulations are in place. So when in 3 years you're building your life, you have a family, you have other costs, and this home cost becomes too much because you no longer want to rent it out to someone. You no longer want to have anybody else carry that load because you need that space for your family. That's when the reality sets in, and they want to switch their mortgage product. They can't because it was fraudulent. And now when they do an appraisal on the home, it's not going to match the value that was given, and they're not going to get the money they're looking for. They can't even switch because sometimes it's classified as a rental property, but it's actually an owner-occupied property. And how are you going to go to a lender and tell them this? You're admitting to fraud. So it sounds really nice. Imagine you came here, your first 6 months, you're going to become a homeowner. I can post on Instagram. Everybody back home is going to see I became a homeowner. It's a very compelling pitch. Most people fall for it because the truth is where we come from, Malaysia, India, a lot of these countries, you can do these things and there's no consequence. So they think it's normal when they come here that they can do that here too. But this is a country, fortunately, that follows regulations, which means you do have to do things the right way or else you face the long-term consequences.
If you want to be a good citizen, then follow the regulations and go by the laws.
Yeah, and it's not just moral. That's the thing. People think it's just moral. You know, if it's just morality, why not? I get ahead by doing this. You're strong word maybe, but you are screwing yourself over. Your reputation takes a hit when you do things like that. If people start to get to know you, they don't want to do business with you because they know you're that type of person. Number two is there are real financial consequences. I'm talking to people whose home value shot up, their mortgages shot up because of the interest rate going up from 1% or 2% in 2021 to now it's 5-6% when they renewed, and they can't afford those payments, but they can't even switch to a better product when interest rates get better because it's a falsely made mortgage. When they take it to another lender, they're not going to accept it. So the consequences are just not good in the long term. It's like some cryptocurrency. You've heard of pump and dump? It's almost like that where it's the rush. Everybody says, get it now, you're going to be a homeowner, you're going to build wealth. And then the consequences come later when your money dips.
When you don't even realize, you don't expect them.
And you feel like you got scammed by people you trust. It's not a good feeling. So I always encourage, if I can, how can I talk to people who are newer to this country before they get caught up in these decisions when they're first coming here? And that is also another tricky thing because an immigration service is cautious of letting a mortgage broker or realtor speak to someone because they're scared if that person does wrong by that person, then it reflects badly on the immigration service. If they're not having these conversations up front, they become vulnerable to someone who has bad intentions. So that is a challenge I'm still trying to figure out. How can I talk to these people before they buy a car that has a $700 car payment, before they enter a fraudulent mortgage, before they make these decisions that feel good in the moment, but really has a big impact on them 5 years down the line?
How should one who's looking to buy a house, how should they be looking at their numbers so that they know with the income they have right now, they can afford this much to pay in the house? Calculations they can do to get some clarity on what they can afford.
Basic calculations help, but that's why experts exist. When you do the basic calculation, you might use an online mortgage calculator, you put in what numbers you think make sense, it's asking you for these questions, you get an idea. But sometimes you're not considering other things lenders might consider that reduce your qualifying ability. So you use an online mortgage calculator, it says 400K. So you said, I'm ready. And you go talk to a mortgage professional or a bank or any lender and they say you can only get 250. You will feel shocked, but you didn't realize that maybe something was classified as a debt that you didn't think was a debt because it's a student loan and I'm not due to pay that anyway, so I'm not going to put that it's 100K of student loans. When you go to a lender, whether it's in payment now or not, they're going to consider that as a payment. So talk to a professional, me as a mortgage broker, or even a bank, whoever you choose to speak to, it's free. And it's a 20 to 30-minute conversation. They're going to ask some questions, and then they're going to ask for proof. People get a bit worried is, hey, why do you need documents, or why do you need to do a credit check? Because that's verified information. Otherwise, I'm working with self-reported information, and it's only a little bit better than you going online and using a mortgage calculator. If I have documents in front of me and I have a credit check, that is the lender is going to be using. Now I can give you advice, right? Whether it's a 1-year plan, whether you're ready right now, or it's a 6-month plan, I can give you advice because I have verified information. My advice would be talk to a professional. Don't be afraid to share things about your situation, even if it takes you 1 hour to find that document. It could save you 2 years of pain, right? Because you were operating with wrong information for 2 years, and then you realize, oh my God, I'm still nowhere near where I want to be. Be okay with the pain of getting the documents, because the quality of the information you provide is going to determine the quality of the advice you get.
Thank you. And do you think this is a good time to buy a house?
There's always a market, and then there's individual, right? If you're a growing family, you're going to need a stable base. You need a home. It's a good time to buy.
Whenever you need it, yeah.
If you're building a business and you have the pressures of making sure your business is profitable, and that is taking up a lot of your time, and you also have the pressure of owning a home, but you don't have a family, maybe you're newly into a relationship. For a long time, there was an air of rushing into home ownership because it made sense. Home prices were reasonably lower. It just grew at the same rate as home prices. There was lower taxes that were easier to get into a home. It just made sense. Oftentimes in history, it was cheaper to own a home than to rent. Nowadays, in most cities in Canada, it's actually more expensive to own a home than to rent. Winnipeg is one of the few, still it's at least comparable. If I'm talking to a family, they're paying $1,300 in rent. There's 5 of them. Their mortgage payment is going to be at least $2,300. If that's the kind of family I'm talking to, I'll say, hey, you do not need to rush into owning a home. You're saving about $1,000 a month right now. That's money you can put towards a down payment. That's space for you to create a plan. I don't want to rush people into home ownership because what's the biggest purchase they make? That's their home. And that's going to take up a lot of attention, not just in terms of your money, but if the furnace breaks down, you have to deal with that. And then that's all if bad things happen. But often we enter a home and we think we can make this better, right? I can make the floors nicer, the cupboard better, the deck nicer. So think about all of these costs on your attention as well. Know what you're getting into. If you know that this is something you want to get into, you have the capacity to care about now, get in. If the interest rate is not great, but you know this is a long-term goal for you, it's fine. The interest rate changes year to year. If you take a 3-year term, by the 4th year, you can get a better rate. So the rate is what people focus on, but it's the least important. Not just financial, but lifestyle situation should have a bigger bearing. Feel free to ask me to clarify.
No, you made it clear to me. I totally understand what you mean. Also, I believe in Canada you have 2 of the biggest purchases, your house and then the vehicle you have. And the biggest mistake immigrants were doing of my age, where they were buying high value vehicles, paying $1,000 in car payments a month, which is not a good decision because they don't have somebody to give advice, right? They don't know at the moment if they're making the right decisions. They're living with their friends, acquaintances, and the type of advice they are getting is what they are following, and that's not a good
I
decision.
don't even think they're getting advice. Their living costs are low. They share
Yeah.
rooms or they share homes, and maybe they're paying $300 a month. So in their eyes, I'm having extra $1,000 a month. Why not buy this nice car? Because I feel cooler than my neighbor or this other immigrant who came here is going to see I have a nice car. Not understanding you're paying $1,000 into a depreciating asset. You buy the car for $50,000. As soon as you drive it off the lot, it's worth $38,000. You lost $12,000. Then interest payments you're making over 8-9 years, whatever those car payments are. By the end of that, you're looking at a $30,000 to $40,000 interest and depreciation costs that didn't yield anything for you. And that's why people 5 years, 6 years into that car purchase often regret it Why did I do this? To feel good, but I don't actually feel good down the line. So I think a lot of people, when they look at a home or a car purchase, they start with, what do I want to drive? What do I want to live in? And I always say, start with what you have. If you are newer to this country, it's normal that you are just building. If you're going to be a builder, you don't get to afford to live a lifestyle of someone who's already built. But that is available to us today because debt is so available. Forget the car payment. You can even pay for your food in installments, right? Your DoorDash delivery, you can do it. Klarna or something like that. I don't know if we have Klarna in Canada, but you can, right? Every purchase has an option to pay in installments. And that's just deferring the pain. And then if you defer pain enough on your clothes payments, on your car payments, your life becomes payments and you're living to sustain payments instead of living to build something.
There's a documentary on Netflix on this, how people nowadays are paying in installments for their coffee instead of houses and cars. Now they're paying for their coffee, their lunch.
Yeah.
It's
Advertising.
unbelievable.
Now this is getting more spiritual. This is getting more spiritual, more emotional, but we make decisions emotionally. That's why I have to address this topic. Why a lot of people want me to be the solution is, I made bad decisions. How can you make this happen for me? But if I do that, I'm helping you make a bigger bad decision. And it's all going to fall 5 years down the line, 10 years down the line. And that can affect my reputation too. Hey, that guy messed me up. After 5 years, you're not going to remember that I helped you get into this. You're going to remember that I put you in a product that put you 50,000, 80,000 in debt 5 years down the line. The conversations with me, I will be honest, for most people who call me, I think their initial conversation is not what they were expecting. It's a bit deflating because they have this excitement of wanting to own a home. And I'm saying, hey, do you have these things in order? Do you have your finances in order? And that's not fun for anybody to look at. I can't recall what the initial question was, but what I'm trying to say here is, yes, market-wise, it is harder than it has ever been to own a home. It's not easy right now. And when things are not easy, the basics matter even more. That you need to start with the right foundation or else you're building on a house of cards. More so than ever, it is important to manage your debt. Focus on how you can increase your income, but your income not increasing is still okay as long as you manage your debt. Because if you manage your debt, that $700 car payment is gone. You bought a car cash. Maybe it's a $5,000 car, easy to save up for. That $700 a month goes towards down payment. Everything starts moving in the right direction. When you have the right momentum, the pressure on you eases. You have space. You can now decide on options. I think it's so wrong for somebody to go and see a home and feel the pressure of, I need that home. Because you're going to get into a position where you're making decisions that are not right. I spoke to someone recently. He saw this home. He qualified for 550, but the home he wanted, the base was 575. It's a new build, so you can do upgrades. I think by the end it was going to become 650. And even though his reach is 550, he wants that 650 and he's talking to me, how can we make this happen? This lender. And I found the solution for him. I said, hey, if you want to, you can go to a B lender who will lend you this money. Keep in mind, this is the interest you're paying. You're paying a 3% or 2% or 1% fee, depending if it's private or B lender. So this is the total cost you're looking at after 2-3 years. Your attention is going so heavily to this home that you are now, by purchasing this home, you are committing for the next 5 years. This weight is yours to carry. Don't even think about your career change. Don't even think about doing things for your family. Think about making this house payment work now. Is that what you want? There is a solution. We can do it because it's available. Is that what you want? And if at the end of that conversation, they say they want it, then that is their choice. I do say that it's not my job to make decisions for my clients. It's just to show them the path of each decision. What is each decision going to look like in 3 to 5 years' time? If you're happy with what that's going to look like and you say, okay, I've helped you because I've given you full clarity, I think that's where the gap is in the real estate market, is a high focus on getting the home, not a high focus on what that's going to look like in 3 to 5 years. Because it's not a fun conversation.
Yeah, one should know what they're getting into, because it's not just few months game. It's gonna be long term, taking money out of your pocket. Tell me, please, how will a B lender, as you said, will help him approve getting 650 home when he can only afford 550? What do they do different?
they have more leeway for debt ratios. Total debt service ratio and gross debt service ratio is how most lenders assess your ability to buy a home. So the normal lender, it needs to be a 39 gross debt and 44 total debt service. So 39% of your income is the maximum that can go towards your home expenses. And then 44% is the maximum of your income that can go to total debt. That is how they're qualifying you. 39%, 44% is the average lender. When you go to a B lender, now they increase that. It can go to 55%. It can go to 60%. Some even go up to 75%. So now you can carry a lot more debt and be qualified for a lot more. But that comes at a cost, right? It's a higher interest rate. Anyone who goes to a B lender needs a minimum of 20% down payment. And then you usually pay a 1% fee up front. So for a 650K purchase, you're paying 6,500 up front. And then you're also paying a higher interest rate. So you'd have to decide that is a worth it trade for you to make. It's like almost like a next level of financing. If you're willing to pay a higher interest rate on your car payment, they're willing to change the qualifying requirements.
I totally understand what are you trying to say here. As myself, I or my friends, we didn't get into any situation like that. We kept it simple for ourselves. I understand, but again, there is still some clarity I would like to get from you.
Sure.
No. As you said, the car interest and
Yeah, I'm not super familiar with car payments, but I do know if you're willing to go from like a 7 to a 9% payment, they might be willing to accept a lower income to qualify for that car.
they'll do something with the numbers.
Yeah, they'll do something. Car financing regulations are getting tighter, but they're still a lot looser than the lenders for home purchases. So that's what I'm trying to say. They'll have different requirements. When you go to a B lender or private lenders don't really care as long as you have enough equity in the home. All they care about is the collateral. As long as you have minimum 35% equity in the home, they're going to get that 35% equity and they can sell the home and get the rest of the money as well. Both private and B, you want to make sure you have an exit plan. You don't want to be in these lenders for more than a year or two because the interest really racks up. So your plan with these would be to try to get in a position where you can qualify with an A lender in 1 to 2 years. So you can start with the B lender and then in 1 to 2 years go to an A lender. Or start with the private lender and go to A or B first, then A, if that makes sense. I would stay away from the car financing because it's not my expertise. I was just making a comparison. But hopefully that's making sense on the B to private side and what I'm talking about.
Also, people don't realize about bad equity, right? When you have $50,000 car and it got depreciated to 35,000 in few months, and now you get bored of that vehicle and now you buy another one. So the bad equity is gonna counted in the next one you're going to buy. So people don't realize that, but these are some of the basics. If you understand them, you can save yourself from getting ripped off. But people who are selling you in the businesses, they might tell you a little bit, but again, because they are going to get paid because you are buying, so they might keep some things under the table.
You have to look at incentives to understand. What is the incentive of someone working in a bank giving out mortgages? They have a manager having meetings with them weekly or bi-weekly about profits. They have a pressure to keep their job. So when you are coming in and you're basically saying to them, I want this, you're actually just telling them, hey, I don't have to explain anything to this guy. He says he wants this. Let's just find a way to get it to him. Because I'm going to meet my quota. I'm going to get paid. Me, as someone who's a mortgage broker, it is a slightly different incentive. Because my name is not tied to any bank. My name is tied to me, my own reputation. If I do that to somebody, it's going to pay me now. But in 3 years, in 5 years, that person is not going to look at me favorably. I can't afford to take that reputation hit. My incentive is to do right by my clients because in 10 years, I want them to say, I still want his help. It's a different incentive structure. That's why experts like me exist. You don't have to understand mortgages completely, but you do have to understand, is this expert I'm working with, do they have me in their mind or their commission check in their mind? How you can know is how much information they're going to give you on your situation. If you go in, a lot of people go in with a goal. I want to buy this house at this price, at this percentage. If they're saying, okay, let's make it happen, but they're not showing you the clarity of the costs, I would be hesitant to work with someone like that. If you go to someone and they say, that's a really nice goal, let's look at your financial situation, let's look at the costs. And they make a spreadsheet to show you down to the dollar, what is this cash you need up front? What are your payments going to look like? What's the interest going to look like over 5 years? So the reality really sets in, right? You're renting at 2,000 right now. The mortgage payment on the new home is 2,000. That sounds really nice, but you're forgetting $250 a month in property taxes. You're forgetting that you're going to pay for heating and hydro. Maybe your rental place covers at least one of those. You're forgetting that the furnace breaks down. You don't get to call a landlord. You have to pay for that. So be ready and make sure you have that in place, budget to pay for those things. So if someone is talking to you like that, that person has your best interest in mind. Although it's not a fun conversation, that person has your best interest in mind. If someone's like, yes, that's what you want, that's the dream, let's achieve it, we'll get it done. If they say we'll get it done, it sounds nice, but we're talking about your money here. If you're talking about a computer repair and somebody says, pay me $200 and I'll get it done, do it. That's a great deal. If it's your house purchase that is ongoing for the next 30 years you're committing to this mortgage, maybe have a little more detail. We'll get it done is not enough.
That's where you dig a hole for yourself, right?
You're trusting someone who maybe shouldn't have that trust right away.
I feel it's very easy today to get yourself into something that you don't want to be in a position, right? Just because everything is so easy to get. Everything is just on payments. From your meals to your houses to your cars, everything is just by payments. That's it, which I don't like. I bought my first car brand new in Canada and I just paid it off. And now my goal is to keep it as long as I can. So I don't have to buy another one, a new payment. I don't have to get a new payment on me. So I can have my freedom, right? I can have money in my pocket. I don't have to pay anything to banks. So I like it that way. Maybe because my friends or people I got in touch with when I was new in Canada, they helped me with making these decisions. Some of my friends, they came before me in Canada and they bought a used car. I came after them in Canada. I bought a new car. So some of the decisions they made, I quickly learned from them. I like it that way. And when I see people making big purchases, I just can't tell them. They didn't ask me for any advice, but it doesn't look like a good decision for them. Right.
Yeah. And it's a cultural
Yeah.
challenge. It's social media. It's movies. What movies do we like to watch? The people who have the nice cars and the nice house, and they do it so effortlessly. On social media, we're looking at someone with the nicest house, the nicest car. Not realizing maybe their family life is off. We don't see that. We just see the best.
See the good one.
And then we see someone with the nicest body, but you don't know what their relationships look like, what their finances. You look someone with the best of every area, and then in our minds, we want the best of everything too, and we think we need to be there now. And if you think you need to be there now, and there's an opportunity for you to do that in the form of payments, that emotional high is so strong, you're going to commit before you even think through the decision. Of course, I don't have the solution. I think it's just awareness. So I always compare it to a grocery store. If you go to the grocery store and you don't think about how much time, money, and human effort has gone into laying out the grocery store so that you spend as much money as possible, you don't have that awareness, you're going to walk in there and come out with at least $100 more than you were planning to buy. If you go in with that awareness that these people have put the store in a way to make me spend the most money, the way it's organized is for me to spend more money than I initially planned on, than just buying my necessities. It doesn't guarantee you're not going to spend that extra $100, but it gives you a chance. Just having an awareness. And the content out there today, 90% is pushing the dream, 10% is pushing the reality. So 90% of what people is consuming is teaching them that. And they think it's just entertainment. Your brain doesn't know the difference.
That's not good. People don't realize how everything is put into place for a reason when you go for grocery shopping or anything like that. How long you been in the industry as a mortgage advisor?
This is my third year.
And before that, what were you doing in Canada?
I was working in sales full time. It was called Victoria Lifeline. But I was selling, Lifeline, like when seniors have buttons that help get them help if they fall.
Okay, that's something new. I don't know much about that.
Yeah, so I was working in sales and customer service in that industry where seniors here in Canada, if a senior is living on their own or they have long periods of time where they're going to be alone, they are more susceptible to falls. And if you're a senior, falls can be quite extreme impact on your health. So having a button that you can press or even one that detects your fall and calls emergency services or alerts the right people right away can be the difference between saving your life or not. So I was helping in that industry. And that's where I learned the skill of taking care of people. Mortgages is numbers. The expertise is different. And I've been spending the time to learn that. But at the end of the day, you are still taking care of someone. You're providing a service in a specific area. And what I try to advise is when you are entering to get help, don't just view me as someone to get it done. I can be that guy. If you want me to be, I can be that guy. And I have been. Because some people say, get it done or I'm going to go somewhere else. But if you want deeper advice, I view this as a long-term relationship when I help somebody. I want to be with you throughout the life of your mortgage. I monitor your mortgage. If it's a variable mortgage, I'm telling you every time the Bank of Canada makes a decision, even if there's no change. So you know exactly what's going on. No matter how vigilant you think you are, 6 months after you've bought the home, you're not looking at your mortgage payments anymore. That's just a payment that gets taken out of your account while you manage your life. That's why I'm there, is to monitor that mortgage so that like what happened in 2022, 2023, people's payments went up like $500 and they didn't realize it until it was too late. I'm monitoring that. When those announcements come, I'm going to tell you, hey, just so you know, Bank of Canada increased their rate by 0.25%. That's going to change your payment by $30, $40 a month. It's not a big change right now, but it might be time to start looking at options to switch to a fixed if this trend continues. Let's say it happens a second time. Now I'd be more urgent and say, up to you if you want to ride this wave or you want to lock into a fixed right now. When interest rates are 1, 2, 3%, there's nothing wrong with locking in. Even 4, 5, 6 is really not bad. It's been up to 17, 18% in history. We are so used to low rates that 4, 5, 6 feels really high.
How long did you work with that other company you said?
It was a couple of years because I entered the workforce full time with that company. I finished my education and I entered there. I was finishing my degree. On a personal level, I had a decision to make. We all have desires that we want to accomplish, and we have the pressure of following the path that is set out for us. And we put off our desires to be of help in other ways, to serve in a business, or maybe you want to do a podcast or you want to do music, whatever it is. We say we'll do it later. Let me sort this out first. And I was in that position, doing the degree, getting the job. And if I wait any longer, I might not actually take the leap. So for me, it was a decision while I was doing those things that this is the jump I need to take. The degree and the job will always be there. I can always do that with my eyes closed. This is the one that's going to require effort because yes, it's helping people, but you're still not going to be able to help them unless they know you exist. Sales and marketing is a big part of my effort. Talking to people, doing podcasts like this, making Instagram videos, reaching out to partners. Realtors are a good partner of mine.
I see you're pretty consistent with your social media content as well.
Yes.
You like to update people with the new updates, right?
Yes, I try to have my social media be an extension of myself. So when you see what you see on social media, hopefully you're finding it's the same type of conversation you're having in person. That is my goal. I think that's how you can have a unique perspective. It's easy for me to say, this happened in the market and these are the effects. But what is my take on it based on how I view mortgages and how I think people should consider mortgages? I try to always implement that. And it can sound repetitive, but because it's the truth. And I try to say the truth that applies to the whole public. Each situation is going to be different. If you're an investor, you are going to have the discipline to carry out a certain strategy. Maybe it's okay for you to go to B or a private lender. You've done your calculations. You know what you're getting into. But people are trying to take that advice and give it to everyone. You can be an investor too. That takes away from the basics of having good financial foundation. You need that. That can apply to whether it's an investor, a first-time home buyer, an immigrant. Everybody can benefit from a good financial foundation. So I always stick to that in my content. It can sound repetitive, but it's the truth. We think the basics are so easy, but they're not. They create a strong foundation, but it takes years and multiple times of consistency and recommitment. It's very easy to make the commitment to have a good financial foundation. In 6 months after that commitment, when you've talked to a few friends, the idea of this new car came in, new business venture, new education that can get you more money. You have all these things you're considering. It's so important to go back to 6 months earlier when you told yourself, I'm going to build a good foundation financially first, not going to get a $700 car payment. So one of my favorite sayings is, we need to be reminded more than we need to be taught. I fully believe that. If me, you, or anyone else today didn't learn anything else for the rest of our lives, we would already have enough information to succeed. We need to remember it again and again, and then put the action into it over and over again. I already know everything I need to succeed. I just need to do it.
That is so true. It's tricky in today's world when you have social media. You cannot believe if it's going to benefit you or if it's true or not. There is so much on social media about anything you search on. There is so much. So it's hard to trust the information you see. On top of that, there's AI now, which can fabricate it and make it look like it's very good, it's true. Right? But that's not good.
We think our brain knows the difference. The hard part is we think our brain can differentiate between education and entertainment. This is a very boring, unexciting truth. Our brain doesn't know the difference. If you're watching that dance sequence and that funny video and the video making fun of someone versus a video that's teaching you how to build a strong foundation financially, your brain is looking at both as education. And you have to be careful because you are not a computer. You cannot process multiple things. Even a computer is processing one thing at a time, but it's doing it really fast. You don't have that speed.
Yeah.
100 years ago, the average human just worried about how am I going to put food on my table and maintain my home. That's it. 100 years later now, our brains haven't caught up yet. You can work full-time at Starbucks. So then how am I going to fulfill my potential? How am I going to chase my interests? How am I going to do things beyond what I'm doing? And when you open that door, you're opening a door to 20, 30, 40, 50, 100 different possibilities. And your brain can probably only do one over a lifetime. You can't do so many things over a lifetime because it takes effort, it takes feedback, it takes time. Even as someone who knows this, I still need to remind myself every day. I need to surround myself with people or content that reminds me because knowing is not enough. I'm only human. If I consume that kind of content, I will get taken with the flow. I will start to feel unsatisfied with my car, unsatisfied with my house. I want more. I want better clothes. So knowing is not enough. It's the recommitment and action around it. We are susceptible to our environment. Anyone who says there isn't, I believe, is not accepting reality. You are the product of your environment. And so you have to be careful what conversations you're having, who you're hanging out with, what you're watching, what you are prioritizing, because saying you prioritize financial stability, but then hanging out with others, watching content, doing things that are inflating your lifestyle, you can say you prioritize it all you want, your actions don't say the same thing.
Sorry, do you find yourself doom scrolling sometimes?
Absolutely, I do. It's the easiest escape. Maybe I wake up one morning and I woke up 15 minutes later than I said I would. That's already a bad feeling. Now I have a choice. I continue my day normally, or I can escape this feeling by opening Instagram and doom scrolling. And sometimes I do give in to doom scrolling. I'm only human. I delete Instagram on my phone for that reason, which is why it takes me a while to respond to DMs because I don't get notifications.
Makes sense.
Instagram's off of my phone. I'm best to reach by phone number or email. But yeah, absolutely. I'm only human. That machine has billions of dollars, thousands of employees, all kinds of they're not employing one strategy. You're getting like 300 different strategies thrown at you. And they have an algorithm to recognize which strategy is working. And I think 300 is probably thousands of strategies. Like for every human being, they have a way to hook you.
That's so true. They just want you to look at the screen and I think everything is working in their favor. They have your data, they know you, your passwords, they know everything about you. And
Because it's convenient. In one click, I can get everything I want. That's hard to beat. Or I can find the slow way of doing this. It might take me 7 days. I don't want to give out my information. So It's the world we live in. You're not going to escape the world we're in. You just have to learn how to navigate it with awareness and discipline, having some foundational morals or values you stick to. We almost every individual, whether you're a business or not today, needs to have a core value system. You need to run your life like a business. Because if you don't have core values to stick to, everything is acceptable. You can watch anything, you can talk to anyone, have any conversation. And when you're open to everything, you're also open to nothing. You're not actually going deep into any one thing. I'm navigating this myself, one day at a time. I try to do it for myself. It's better to do it and be an embodiment of it rather than try to tell it. So as much as I can, I try to do it.
Sure, thank you. Do you want to add something else in case we missed something?
As far as mortgages go, there's a hyper focus on strategy. I see things out there about you should keep your mortgage because it's a low interest rate and you can invest it into the market and gain a higher return so you don't need to pay off your mortgage right away. That is true numerically, but it requires a lot of discipline. You are expecting that this person for 30 years will make the right choice of taking their extra money and putting it into an investment, which I can guarantee you a majority of people, when they have extra money in their bank account, might go on a vacation or might pay for a car. It's a rare few that actually execute that strategy, not because they're bad people or humans. It requires an exceptional amount of discipline to keep doing the same thing for 30 years. So I always worry when people are being sold strategy, because before you look at strategy, it's the same thing. Go back to the foundation of your finances. Be honest with yourself and say, am I really the person who's going to execute this strategy for 30 years? Or is that money going to go to a vacation, a nice watch, a nice car? And if I believe that's the thing, maybe focus on paying down my debts first.
Do you think if somebody wants to live their life without owning a home, without having the responsibility of maintaining it for 20 years, they want to live a life in an apartment and they want to spend that extra money on exploring, going to different places, countries, exploring different food, cultures? Or do you think it's good to have a home?
I don't think everyone needs to own a home. My job is not to convince people to own a home. My job is to help someone who wants to own a home get there.
Make a wise decision.
I don't tell somebody they need to own. You have to decide that for yourself. In today's world, it's harder than ever to own a home. It's no longer an automatic decision. It used to be a pretty automatic decision up until recently. I think 2020 is where the real shift happened, where home ownership stopped being an obvious thing and it started to become a bit of a choice, because the cost of home ownership went up dramatically and people's wages didn't go up. Now, if you look at home ownership, it's no longer a no-brainer wealth builder. It's a question of values. Do I value having a place that in 20 years I own outright? Nobody can evict me. I have this stability. Is that valuable to me? And often it's going to involve maybe a partner, a family that values that. If that's valuable, no matter the numbers, you make it work. You make it happen because that stability is valuable to you. I know in 20 years, this place is where I'm going to live. I own this land. I own this home. If you think business opportunities are what's most valuable to you, and you understand that businesses are also an asset and they can appreciate just like a home can, and you're willing to put the effort into your own business, and so for you it makes sense to rent so you can focus on your business and build that asset over a 20-year period, that's fine too. That's a different level of discipline. And if you know that reality and that's okay with you, go for that. If you want to rent and just invest in the stock market, you can do that. You can do these calculations. Let's say your rent is $1,500. Start at that $1,500 and assume your rent is going to go up 5, 10%, whatever percentage you decide it goes up every year. Do the math of how much the extra money you have left over after rent, put into the market over 30 years with an assumed return. Do that math. Then do the same math with now I own a home. Now you have to also include property taxes, utility bills, and build in some potential repairs. At least 2-3K minimum is going to happen. Build that out for 30 years and look at your current job and your situation. Look at if you're going to have any money left over to go into market, put that in and play out that scenario. And where do those scenarios take you and which one makes the most sense to you? That's numbers, but the value part also comes into play. If you are okay with moving every few years, then go ahead, don't own a home. If you think you want a stable family situation where you want to be part of the same community and build in that community, then homeownership might be important even if the numbers don't support it.
That's very well explained. Thank you for coming on the podcast today, and thank you for distributing all the knowledge.
Thank you for having me.
I hope people will have much bigger picture now when they go for looking for a new house. In case you miss something, if you have any message for the viewers at the very last of this podcast, please.
Make decisions based on your reality, not what you think your reality should be. If you want to reach out to me, you can reach me on Instagram, JD Singh Mortgages. That's probably the best place is Instagram. My phone number is out there. Just Google JD Singh Mortgage and you'll have all the information you need.
I'll put it, your Instagrams and your phone numbers on the video so people can reach you, Jaidev. Thank you for being there.
Thank you, sir.